Permitting all of these paper claims to be created on the same amount of silver has allowed the pace of silver to be managed. And I think they're trapped. I really, truly do believe that they are trapped. And Shanghai's not making it easy for them. $4 premium on the Shanghai Metals Exchange. It started at 2, then 2.5, then 3, then 3.5, and now we're damn near $4. They are incentivizing all of the silver that can be sent east. They're incentivizing. Now, they are giving up some to the West, but what did they have to do? It appears that way. What did they have to give up to do that? What are they getting to do that, rather? What did the West have to give up to do that? That the bottom line here is that these banks are naked short massive amounts of silver. And I think they're realizing that it's becoming harder and harder to get silver, and being naked short to that degree, millions and millions and millions of ounces, is detrimental.
In the continuation of the episode, Andy Schectman, president of Miles Franklin, highlights a potential silver squeeze, indicating a strategic shift among major bullion banks known for their historically short positions on silver. His observations are particularly focused on their recent activities with the Shanghai Metals Exchange, suggesting a possible recalibration in their silver trading tactics. Schectman also points out the significant undervaluation of silver, emphasizing its investment potential against its real scarcity and industrial utility, which are not fully reflected in its current market price. On a global scale, Schectman discusses the shift in economic power from west to east, with countries like China decreasing their U.S. Treasury holdings while increasing gold reserves. This trend of de-dollarization and commodity-based wealth is echoed by other central banks, which are moving towards repatriating gold, thereby reducing reliance on traditional fiat currencies. Additionally, Schectman addresses possible manipulations in the silver market, noting discrepancies between reported trading volumes on COMEX and the actual physical silver available. This underreporting distorts true supply-demand dynamics, making market navigation and investment decisions more complex. For investors, understanding these nuances is crucial to recognizing both the opportunities and challenges within the precious metals market. Now we'll show you more clips, but first, hit the like button, smash the subscribe button, and feel free to send a thanks if you find our recaps valuable. Let's get back into the episode.
To, suppressed interest rates and easy money. And a couple of the only assets that haven't been distorted to the upside have been gold and silver. Look at the Dow Jones, look at the NASDAQ, look at the S&P, look at all of these. Look at real estate market, look at the bond. All of these things have been distorted, everything, through suppression of interest rates. And that's the problem. The misallocations in resource and capital, the distortions in asset prices, price discovery. These things have all been distorted, yet you look at gold and silver and ask yourself, why the hell would there be 4 or 5 commercial banks that hold the largest short position in any commodity traded on the COMEX in silver? Now, there's a lot of talk going on right now about what is really happening with silver. But ask yourself, why the hell would they be short? To me, it's as dumb as a mud wall. And so when you look at real value, you could argue that the gold and silver are massively undervalued in comparison to things like the Dow Jones and the S&P and the handful of stocks holding it up. So I guess it's in the eyes of the beholder. But to me, even at gold at 2,400, it's undervalued as to where it really, truly should be. And I think people's idea of valuation are misplaced. Again, I will point to the fact that gold and silver are assets that have no counterparty liability. And the West has proven how dangerous it can be in holding traditional assets. They can be inflated upon, they can be defaulted upon, and they can be confiscated if we don't align ideologically. That's like sticking a knife into the heart of this country's trust globally. And you take a glass and throw it against the wall and break it into a million pieces. Putting that back together is not easy, if not impossible. And I think we've come damn near close to destroying our trust. And now if you talk about lowering rates and giving up on austerity, giving up on normalizing, I mean, we never will. We got 200 trillion literally in debt, both funded and unfunded. How how do you ever normalize? I guess you probably won't, and we will do what all governments have done, and that's to choose inflation over austerity. But it's not going to end well. And this is the whole reason why the central banks, who not only are the wealthiest, but they're the most well-informed traders in the world, and they continue to buy gold because they see the handwriting on the wall, while the people in the West believe this could never happen to us. And that's the fatal flaw in all of this. And what I'm basically getting at is that permitting all of these paper claims to be created on the same amount of silver has allowed the pace of silver to be managed. And I think they're trapped. I really, truly do believe that they are trapped. And Shanghai's not making it easy for them. $4 premium on the Shanghai Metals Exchange. It started at 2, then 2.5, then 3, then 3.5, and now we're damn near $4. They are incentivizing all of the silver that can be sent east. They're incentivizing. Now, they are giving up some to the West, but what did they have to do? It appears that way. What did they have to give up to do that? What are they getting to do that, rather? What did the West have to give up to do that? And I think that the bottom line here is that these banks are naked short massive amounts of silver. And I think they're realizing that it's becoming harder and harder to get silver, and being naked short to that degree, millions and millions and millions of ounces, is detrimental. Says that this all happened first time ever. He admits it publicly, and then he dies a week or two later. Now, I'm not saying there's a correlation there, but I'm simply saying it's vindication for all us people who say this stuff happens. The head of the former CFTC, or the former head of the CFTC, Bart Chilton, admits this stuff is happening. And what I'm basically implying here is that I think the West, I hate to use the word silver squeeze, but that's almost as if what it appears is happening. When you have countries like India and China massively accumulating silver, where the rumors are China's telling its populace to start to buy silver, where India is buying it hand over fist, and the amount of available silver for delivery is way, way, way under what the completely and totally rehypothecated LBMA and COMEX have sold, which are, promises to deliver. It's setting up for a massive silver squeeze. And maybe, just maybe, this is why you had these 4 big cartel bullion banks, who are notoriously known to be short, coming over with hat in hand in the Shanghai Metals Exchange 4 weeks in a row. Maybe that's what this is talking about.
In today's news recap, silver price nears $29.50, eyes on U.S. CPI and Fed rate. Despite reduced bets for a September Fed rate cut and a strong U.S. labor market, the silver price regained strength, turning bullish around $29.44 and reaching an intraday high of $29.49. The upward trend is attributed to a slight weakness in the U.S. dollar, which lost some gains recently due to cautious sentiment ahead of the latest U.S. consumer inflation figures and the Federal Open Market Committee meeting on Wednesday. Additionally, escalating conflict and instability in the Gaza region have increased demand for safe haven assets, further supporting silver prices. This geopolitical tension is seen as a key factor in helping the silver price remain strong. The U.S. dollar has been gaining momentum, driven by growing investor confidence in the economy. Expectations for a Federal Reserve interest rate cut in September have dwindled due to strong labor market conditions and persistent inflation, pushing the U.S. dollar to nearly a 1-month high. Investors are now focused on the upcoming U.S. consumer inflation figures and the monetary policy decision. The Fed may consider a modest 25 basis point rate cut later in the year, possibly in November or December. Now we'll show you the best clips of the latest interview. Info in description. Now smash the subscribe button, turn on notifications, and share this video with a silver bug. Enjoy the episode.
You can't export gold out of China unless you first take one of your bars and deposit it in the Shanghai Free Trade Zone or the Shanghai Metal Exchange. Then you can export it, but you can't really in general export gold, but you can export silver. And there's been all this talk recently of these traders showing up at the London Metals Exchange, the big bullion banks, right? And it's really interesting. So I started doing a little bit of digging on my own, and I found out that let me see if I can find the actual dates here. Give me 1 second. Hang on here just a moment, because 4 bullion banks showed up at the Shanghai Metals Exchange for 4 straight weeks, second week of March. And if you look at first it was the Deutsche Bank, then HSBC Bank, then JP Morgan, then Standard Chartered. Going back to the second week of March, and if you realize that silver can be exported out of China, but gold cannot, look at the Shanghai Metal Exchange silver numbers since the second week of March, and they're going straight down like this. And I have to wonder if there's a coincidence. You go right to their website and you can see that these banks showed up. They're taking pictures of it. Why are the banks showing up in Shanghai? The banks that are largely short on COMEX and the LBMA. I'm going to talk about how short they are in a moment. But why are they showing up? And then all of a sudden, the silver inventories in Shanghai start to drop. Does it mean that they're caught? Are they trapped? And when I say that, look, as I mentioned, India's imported over 500 million ounces of silver in the last 2.5 years. COMEX only has about 60 million ounces in the registered category, backing the bar. So you're talking 9 times as much has been imported by India in the last 2.5 years as COMEX has, period. And yet it is estimated that the contracts in the registered category are rehypothecated or resold at 1,600% or more. So 16 people hold the same contract. Good luck trying to stand for delivery. When you talk about the LBMA, that's a whole different animal all to itself. And you have basically all the big bullion banks at the LBMA, right? And so the LBMA tells us that they have 800 million ounces of silver in on their platform, of which 500 million belongs to the ETFs. So that leaves 300 million ounces. So between the registered category on COMEX and the 300 million ounces there, you got 340 million ounces. And you could even throw some of the registered or the eligible category on COMEX into the mix. So say they got 400 million ounces, whatever that is. The LBMA right now is trading, at least what they tell us, 292 million ounces of silver per day, right? But it's interesting when you realize that they've admitted that, and so have the bullion banks, largely in a survey that was done, I don't know how many years ago, that polled the bullion banks, that actually the numbers, the settlement numbers that the LBMA talks about is actually 10 times the volume they say. Because basically what happens is if I sell you 10 contracts and I buy 5, the net result is +5. They'll only count the 5, not the 15. So if you realize that the LBMA admits that they're actually trading 10 times more than they're posting, that would mean they're trading 2.9 billion ounces of silver per day, or 3.5 times the global mine production per day. Now, when you realize they're at their lowest level ever and the COMEX has bled down, what the hell are these 4 banks showing up for in Shanghai if you can't export gold, but you can export silver? Does that mean they're trapped? They went there and asking for some help, a little quid pro quo. Look at the numbers on Shanghai. They're falling since the first day they showed up there. There's 500 ounces of silver in the tip of every Tomahawk cruise missile. And, it's interesting when you look at the Silver Institute numbers, which show a deficit, a structural deficit, over 200 million ounces the last few years in a row, omits any military application. And we're led to believe that it is a little bit of physical monetary demand from the people who are buying physical silver, but mostly it's industrial in solar panels and electronics and green applications. John Little of who I mentioned earlier, Pickaxe, has done an amazing job in talking about the military industrials complex role in all of this. Now, when I gave that speech 2 years ago, a man came up to me in the audience after, and he said, I'm a consultant for the Department of Defense, and I actually helped design the Patriot missile. He said, I'm not sure how much, but I do believe there is some silver in it. I'll get back to you. Never heard from him.
What do you think of Andy's point? Is the East taking over the metals? Will the U.S. dollar officially be replaced by the BRICS nations? Post in the comments section down below your honest opinion on the complex situation we're going on, and watch this video right here because you'll love it. I see you on the other side.